Hey traders, and welcome to a very quick lesson that I wanted to record because this week I made a couple of mistakes and I wanted to reflect on them, and I wanted to put it in some sort of content piece so that you can actually learn from those mistakes as well. So it's more about the full hourly bias and ranges, and usually after that a lower high is created, for example, right there, or a higher low is created right there, you should not be looking for shorts anymore. Okay, so basically, depending on the hard time frame that you use or the range that you're inside, so this is also a very tricky part, is like determining which is your range. Okay, but usually we would love to use the full hourly for that. So let's say that we have a nice push to the downside on the full hourly, and usually this is where a lower low is gonna form. Okay, why is this lower low gonna form? There is usually something on the left that the market is gonna react from. Okay, but it's just a reaction. Again, keep in mind that the price is fractal, so you can just have a reaction, but again, on the 4 hourly time frame, this is going to be a big uptrend on the hourly and on the 15 minutes, so you can definitely go long on this. But the thing is that always drop your Fibonacci. This is the Fibonacci tool. There are the settings. You just have 0, you just have 1, and you just have 0.50. Then do your colors, background if you like, right? So basically, as the market goes down right there, this is only when you want to look for buys, okay? And you only want to look for buys towards that 50% range. As the market crosses that 50% range, you should no longer look for longs, okay? You should immediately be focused on, okay, where is my point of interest so I can start taking shorts from here, okay? And then riding it down all the way for a lower low, okay? Because the mistakes that I did this week was that we had some sort of hourly break of structure right there, and we had some sort of demand right there, all right? And then I tried to long from here, expecting the market to reverse with this beautiful full hourly downtrend, okay? So what I had is just the market reversed. What I had a very slight reaction, and then it just reversed again, okay? So after the market has actually tapped above the 50%, the only focus should be shorts. So basically this blue rectangle right there, this is your only area for taking longs. And as the market has already come into premium, this is called premium prices, this is called discount prices. Basically, this is high prices where we want to sell from, and this is low prices where we want to buy from, right? Same example with an uptrend. If you had a nice push to the upside, this is the point where usually you're going to have something on the left. Usually the market is going to start reacting, and this is where you want to start looking for shorts, all the way down towards the 50%. And as the market taps the 50%, you are done. You should be focused on, okay, where is my long area? Right there, okay? Or my long point of interest that I want to go long from. Because again, you can do the same mistake. On the hourly time frame, this can look like a nice downtrend, and you can have something like this, let's say, right here. And you can be like, cool, I'm going to take shorts and just dump to the downside. But always, always, always the higher time frame is going to prevail. So even if you have an hourly OB inside this price right there, and it looks something like that at this point, it will not work because simply the market is coming from a bigger demand level on the bottom, which is on the full hourly as well. So always higher time frame is gonna win. And maybe you're gonna have a little reaction that you can take a little pullback trade, but then at the end of the day, it's gonna carry on to the upside, okay? And that is a mistake that I did this week. I did not focus on this, and I'm gonna show you some examples as well. Then your next question is, cool, yeah, but how can I trade those? So basically this is where you want to identify when a lower low or a higher high is created, and this is still called retracement or reversal trades. It's not high probability, but of course you don't want to wait. Let's say this move to the downside takes 5 days. You don't want to wait 5 days for this pullback, okay? Simply what you have again is your favorite formations, all right? This price action right there happens inside this little circle right there, and this price action right here happens inside this little circle, all right? Just bearish and bullish scenarios. This, I would prefer for you this to be the 15 minutes, okay? So basically you're gonna have a nice downtrend, then always the market is gonna consolidate a little bit, all right? It's gonna create a range. Then usually you're gonna have London open, New York open, manipulate, trick a lot of sellers, and then you're gonna have a break of structure, and you only want to start taking the retracement trades after that break of structure and after the first mitigation. So even this also is aggressive with this sell to buy. There is your first trade, then another beautiful buy that also broke structure right there. So you can of course start looking for trades even here. That is your highest probability. And then from here, you ride it towards the 50%. Let's say that you have something like this and you manage to get, let's say something like this, and you spot the reversal down there. So you trade the market all the way up towards the 50%. Then you look to close your positions and start focusing on shorts. And again, same thing for a bullish market. The market is trending to the upside. Usually at the top, you're gonna see some sort of distribution, all right? Some sort of consolidation, some choppy markets, and then you're gonna have that swing to the upside to trick the buyers, thinking that it's a hard high. And then this is your buy to sell. Basically, you can mark it like this. This is your manipulation right there. And then the market drops to the downside. And after you have this break of structure, usually, as you can see, the market is going to react from some sort of demand on the left, but the market needs a pullback. So definitely it's going to pull back like this. It's going to tap into the supply. And basically right here, you have, again, the higher time frame bias, because you are either tapping into some sort of supply on the left, or the market is just too high at this point. All right. So I really hope that makes sense. Let me maybe just have a look at some fresh examples, but yes, if you have any questions, my DM is always open and the chat is always open. So let's look at that. So basically, again, you can see that this week we had this beautiful high right there. This is the weekly high that was created, and then we very sharply dropped to the downside, and we also broke structure right here. Okay, so basically, if this is your swing high and this is your swing low, you drop your fib from the high to the low. Again, I'm gonna immediately ask you, where is your place to be taking longs, right? It's from here to the 50%, okay? And then there, as you can see, again, you have the same formation. You have the consolidation, you have the fake above, and then we create a new range, okay? This is how the ranges are created. So right now, what is our range? It's this, from the high to the low is not yet created, but basically what you're gonna do for maybe next week as this market opens is you're gonna try to trade the price above the 50% where we are gonna take our sells, okay? And yes, basically if I just drop quickly into it, you can see that the market creates this beautiful sell to buy. Again, as I told you, where is it? There is your sell to buy. We broke structure. Let's show you just a quick example. There is your sell to buy. We broke structure, and basically you would like to enter a trade from somewhere from right here, okay? But what the market did is just went away. It provided us with some buys in these areas, but it was not that clear. And then we actually tapped the 50%. We reacted a little bit, but then this is again consolidation. There is your manipulation above. So the market stopped right there. Why? Well, we have to maybe examine the lower time frames. It's also imbalance as well. And then we reverse. So basically, if you take a long trade from here, it is wrong. Okay, why? Because we are bearish from this swing to this swing. The market went above the 50%. So from here, we should start focusing on shorts, not longs. And as you can see, the market will always give you a reaction, but this is just a reaction. So if you take a long from here, cool. You had a nice push to the upside, but then the market just created the lower high and dumped to the downside. So you should have been focused more on actually looking for the short. And this is just a reaction point for the market to give you a pullback, then to continue to go down. Okay, really hope that makes sense. And as you can see, this is playing out constantly. So a little assignment that I want to give you right now is go and spot those things on your charts, okay? Because you're gonna find the market always doing this. My mistakes from EU this week, let's have a look. There is our swing high, there is our swing low, okay? Drop it like this, there it is. So basically, yeah, I tried to take longs from here when the market already went all the way up and mitigated the origin of this huge move to the downside that broke structure, right? So as the market is up there, the only thing that I should be focused on is taking sells, okay? So basically taking a long from here is wrong. Then taking a long from here, which I did from, I'm not sure where, but from here is wrong. Also, because what the market started doing, it started just creating bearish structure. Okay, there is your high, there is your low, pullback, lower high again, and then a push to the downside. And again, as I told you, the market is fractal. Okay, there is your consolidation, there is your buy to sell, the same formation that I showed you. There is your little pullback, lower high, and then a massive dump to the downside that broke structure. Drop your fib. Okay, boom. Where do you want to look for longs? Inside this area, if you get the long, because not always you're gonna get it. Then the market pulls back, perfectly taps into the lower high. So there is no way that you should be looking for longs. Even if you look for longs from here, it's just a reaction for the market to pull back into a bearish OB or something bearish to eventually make that big lower low. Okay. And yes, this is actually the two examples from this week. Just misunderstanding the overall range. Like have a look here. Let's say that this move started from down there like this. Let's drop it up. Where do you want to take sales from? From the high as you have the reversal to 50%. And as you can see, the market taps below 50% and then we just reverse. So if you wanted to take shorts from here, it's wrong. Okay, you're gonna have a reaction, but then the market is gonna prevail to the upside. All right. Sometimes, of course, the market is not perfect. If you have a swing, not always. Yeah, it's most of the times it's gonna go above the 50%. And if it does this, then start to orientate yourself to be taking the opposite position. All right. So basically, yeah, sometimes also the market is gonna fail. Let's say that this is our push to the upside. There is our pullback. So you usually look for longs right there, but of course, this is the market. We got the reaction from here, failed to follow through, fail, then boom, break below. So you should immediately adapt and be like, cool, we reverse down. So my new range right there is from the high to the low, like this. All right. And then you look for longs all the way up. And then as we get inside here, this is a very deep premium price. So you should be really looking to short from here. And we had a beautiful downtrend today. So right now, if you ask me right now, how are we going to draw it? Okay, where does the move start? From up there. So take your FIP, maybe from this week, maybe it doesn't really matter, and drop it to the downside. So right now we are waiting on the 15-minute for the market to show us a reversal formation, which we don't have yet. And then depending on how it develops, we would like to take longs all the way up towards the 50%. And then usually you're going to have something inside here that is going to give the market the sell. Maybe it's this whole range, which is an OB on the hourly. Maybe it's just this little slowdown right there. We don't know, but we just have to prepare to take shorts. And even if we have some sort of demand right there, we should not look to take a long for our high. We should just start looking for the shorts. Okay. So really hope that's clear. Let me know if it is. If you have any further questions or any further remarks that you want me to cover in detail, let me know. And I really wish this is actually gonna improve your probability on your trades.